You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 8th of October, 2018. We see stocks and bonds down for the day, gold up. As we end the week, as we always do, we jump into the weekly chart first with the S&P 500 as depicted by SPY, the exchange-traded fund that tracks the Standard & Poor's 500. What do we see happening? Well, the week ended pushing through the weekly trend line. Now, the weekly trend line has been going up since we had the weekly vertical crossover occur back in mid-July. There have been a couple of pullbacks along the way, but over the last 2 weeks, we've seen things really stop. The market peaked out back on the 21st, according to our Heikin Ashi candlesticks. That was of September. And over these last 2 weeks, started heading down. What we have right now is a red spinning top, again piercing that former strong weekly trend line. A red spinning top means indecision tending down. We see the price percent oscillator heading down strongly. Do you know what the price percent oscillator is? Well, I'm going to put a training at the end of this program to explain to you how important that is. Very akin to the MACD if you're familiar with that. And the derivative oscillator also losing energy. I'll put another training in at the end of the program about the derivative oscillator so you can understand both of those. Our main indicator, the price percent oscillator, and the derivative, both of them losing energy heading down. We don't have a weekly vertical crossover yet, so we are not calling that, but we are watching out for it. Now we go from the weekly to the 2-day as we hone in a little deeper. Of course, you see that 2-day really dropping after a green open box up candle ending on the 3rd of October. This latest 2-day candle ending on the 5th, really pushing through that weekly trend line, price percent oscillator diving over down, and the derivative oscillator heating up with lots of downward energy, showing you where price movement is going. In that 4-hour chart, we have 2 days. That's 4 candles of strong down movement, first piercing the weekly trend line back at the end of the day on Thursday, the 4th, and then more down movement throughout the day. So we're going to be watching over the course of this next week to see if we have a weekly vertical crossover heading down that would give us a trading opportunity at the end of the following week. We're not calling a down candle. We just don't do it until it happens, but it sure looks like it's getting awfully close on the S&P 500 weekly chart. And I apologize because things are loading up very, very slowly here. We're going to go over to the Qs. That's the NASDAQ 100. What do we see going on there? Well, we've had a sideways slide for quite a while when we look at our Heikin Ashi candlesticks. And I'll put another training in there so you understand what Heikin Ashi candlesticks are about. That'll be the 3rd training we'll put at the end of the program today. And if you get a chance over the weekend, listen to all those trainings. They're absolutely free. That Heikin Ashi training has had over 90,000 people listen to it, the most popular thing we've done. We see that we had a weekly vertical crossover going down at the end of the week on the 21st. And what we have had happen is things really dropping over, heading down strongly on the Qs. We didn't have any trade the prior week ending the 28th, but we've had some interesting things happen over the course of this week. Now, we have a red spinning top, almost a doji, means indecision tending down, but what we see happening with that price percent oscillator is it really spiking over in the derivative oscillator, heating up with lots of downward momentum. We go to the 2-day trend line. And as it slowly loads up, hopefully it's going to do that for us, we will see more momentum gaining in that oscillator, both in the price percent oscillator and the derivative oscillator. You see how the derivative oscillator kicked over going down, turned from green to red in this latest 2-day candle, and how the price percent oscillator also spiked down. And what a huge down movement on this candle. Now, what did that portend? Because remember, we had not gotten into a trade because we didn't have the qualifying requirement, which is that we have the 4-hour chart crossover going down and head down strongly. That had not been happening, but we saw that happen over the last couple of days, and it rewarded us greatly for waiting until that signal occurred. And if that signal will just load up so I can show it to you, that would be wonderful, because you can see how strong that movement was as the price percent oscillator and the derivative oscillator really dove over. It happened not in the morning on Wednesday the 4th, but it actually happened in the afternoon. And that was the jumping in point for it after that crossing occurred. And what you saw happen very strongly on Thursday, we had that jumping, we had the real down move and the jumping in point on Thursday afternoon. And then, of course, Friday, things down even more. The Qs on Friday alone down 1.19%. That shows you the power of waiting for that pullback to occur and then that jumping in signal to happen. Jumping in point somewhere along, and again, these are Heikin Ashi candlesticks, somewhere about the 185 mark all the way down to 179.73. Now that's over $6 worth of movement, and I say that guardedly because I'm viewing this from the Heikin Ashi candlestick. If you want to see what it really did, look around noon on a regular chart on Thursday, and you can see where the jumping in point was. And the bottom, the low, 178.43. So that's around $5 to $6 in anybody's pocket. That again is quite nice for a practice trade. And those of you saying, wait a minute, how do you make money when the market goes down? You get into an inverse fund like QID. Now, that's a double inverse. They're single inverses typically. If you're going to practice, I recommend you practice with a single inverse fund. So you want to practice on that. Give that a shot. And again, great training at the website under inverse funds, how to make money when markets crash. But again, that's the beauty of the weekly vertical crossover. And that's what we've been waiting for, what we've been practicing on. And of course, what else is beautiful in our world? It is TLT, the 20-year bonds. Of course, we've been calling an inverse trade in those, have we not, over the last several weeks. We had the weekly vertical crossover going down back on the week ending the 14th of September. What have we seen happen since then? Strong, beautiful down movement. Again, down over the course of the day on Friday alone, 0.84%. And again, derivative oscillator gaining downward momentum, price percent oscillator spiking down over the course of this last week. And we see on our 2-day chart continued down movement. We will also see that on the 4-hour chart and the jumping in point. And again, I am in Europe. I can't control how fast these internet connections go. I'm trying my darndest to get this up for you as best we can. And there we go. It's showing. So what do we see? Well, we see where that weekly vertical crossover occurred and how strong the down movement. Had a little bit of sideways movement on the 2-day chart, the 27th, the 2-day candle ending the 27th and the 1st, but then spiking down again on the 3rd and the 5th. And then lastly, we go to that 4-hour chart where we see the point where we jumped back into the market on that 4-hour chart, how we had gotten in originally when we first had that crossover going down, and then how we got back into it and watched it work for us. I'm just hoping that's going to load up so you can see it. There we go. We had things reverse back over where we pulled out of our practice trade, let the market move back up, and then crossed back over going down on Wednesday morning. Our jumping in point was Wednesday afternoon, and it's continued trundling down since then. And of course, we hopped back in on that inverse trade on TLT. And again, you can participate in that inverse practice trade with either jumping into an option, a put option, or jumping into an inverse fund. And again, the only problem with TLT and jumping into an inverse fund is that there is quite a spread between the buy and the ask. So it's not too liquid. But again, worth practicing. Now, what do we see going on with gold? Gold up for the day. And what has gold done? My friends, gold has actually crossed over going up. It has technically crossed the mark. The blue has crossed over the red just barely, and we're going to go ahead and call that on gold. I do it with a little bit of trepidation because it's not a strong crossing over, but we've seen this gold slide sideways 7 weeks now, but it did end the week with a technical crossover going up on that chart. So gold is no longer in a confirmed down move on the weekly chart. It is a confirmed up move now. We will look at the market on Monday to see if we have a jumping in point. Now remember, what you do is you check the 30-minute chart around 10:30 or just stick with the 4-hour chart. If it's moving up on Monday at either of those times, depending on whether you're using the 30-minute or the 4-hour chart, that is your jumping in point for a practice trade in gold, since we have a qualified weekly vertical crossover going up. That's how strong that is. You've seen how strong it's been and how it's worked on TLT and the 20-year bonds. Remember, our derivative oscillator is going up now, and our price percent oscillator is heading up. 2-day chart's been heading up since it crossed over all the way back on the 24th of August. Now again, most of it a sideways slide, but it stayed positive. Derivative oscillator also gaining upward momentum. And what's this 4-hour chart doing? Well, we will continue to keep an eye on it. It went up over the day on Friday, 0.31%. So we'll continue to hope that that will continue in an up move. And again, if it doesn't, like the Qs did over the last few weeks, it pulls back strongly. It's really just been moving sideways mostly. Then we will wait for a reversal to occur and it to turn back around and go moving in the right direction, if indeed it does. We see the derivative oscillator losing some momentum, but the price percent oscillator is heading up strongly. Folks, things are exciting. Remember, we're in the fall-winter trading zone. Always caution in the month of October. That's where all market crashes have historically occurred. So pay attention. Make good moves in your practice trades and stick with us. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.